Ladies and gentlemen, the last panel discussion of the day. May I request the moderator, Mr. Karthike Raman, to please join us on stage. And the topic will be AI versus AI, the new battlefield in digital lending. Risk. Now I request our panelists to please join us on stage. Mr. Ranjit Singh, Chief Credit Risk Officer, Credible. Ms. Devanshi Mittal, CTO, Maximo Capital. Mr. Jatin Bajaj, Head of Internal Audit, Hero FinCorp. May I request you all to please give a big round of applause. Now I hand over the mic to you, sir. Over to you.
Good evening, everyone. This is Karthike Raman, and very happy to be a part of the panel today, and with such august speakers in the panel who would help us understand this very interesting topic. So when I got to know about the topic, I was also wondering that how much of it would be relevant when it comes to NBFCs and especially the BFSI, because we were talking about AI versus AI. But the more I researched on it, the more I understood, although we do this cybersecurity for very large MNCs, but we wanted to also understand that how it has evolved as a topic for BFSI when it comes to AI attacking. That is when AI is attacking us, and then AI is there in our blue teams also. So AI is red teaming, as well as there's a defense of AI also helping us. And the most important thing that is crucial for this topic is that whosoever is not ready is the target. So if we are not ready with our AI systems, with our AI cybersecurity, protecting our perimeter security, definitely, although we are using AI on a daily basis, but we will be sitting ducks because there would be a lot of AI-led attacks that we'll need to solve for. Said that, today I would like the panelists to introduce themselves, and then we'll start off with the discussion. Sir.
Hi, thanks. I'm Ranjit Singh. I am Chief Credit Risk Officer for Credible. Credible is a supply chain finance NBFC. We are also fintech. We are also a fintech company where we develop software platforms for banks and corporates.
So I'm Devanshi Mittal. I'm the Chief Technology Officer of Maximo Capital. We're an NBFC and we cater to MSME. So we are in MSME lending, business loan, supply chain financing. So yeah, thank you for having me.
Hi everyone. My name is Jatin Bajaj. I head the internal audit team of Hero FinCorp. We are an NBFC, a middle layer NBFC, deals in all kind of retail and corporate products.
Okay, thank you all the panelists today, and we'll straight away start off with maybe Devanshi with you, and what we are actually seeing in specifically when it comes to AI versus AI is that when we are industrializing the operations using AI, like when we are trying to incorporate AI for various things, for example, for enterprise grade AI like Copilot or OpenAI, ChatGPT, we are using AI in all the use cases, and I would suggest a lot of companies have even gone ahead and deployed some of these AI tools within their ecosystem, whether it is SLMs or maybe a LLM required. So my question is that with this, increasingly we are hearing that even fraud networks are using AI and on a daily basis. And there are adversaries which are able to even weaponize some of these AI. So how, in your experience, can it be dealt with?
Yes, so we have definitely moved from more opportunistic fraud to industrialized fraud engineering. So earlier, fraud was more reactive. It happened more because of one specific entry point, maybe fraud documents, stolen identities, mule accounts, but it was far more detectable. But now the fraud teams are working as more structured teams, companies in fact, they're using AI, generative AI, and many different forms of AI to create high fidelity synthetic borrowers, which are not just your fake identities, but they are actually consistent, coherent profiles. And they in those profiles, they are so consistent that even, for example, the GST filings, they will, match your turnover claims, or the banking will actually reflect the logical cash flow. The social media presence is well aged as well as more consistent. Even the your live videos can pass the basic live test. So that is happening. The real differentiator over here is realism. But something which is much more concerning is the behavior simulation. So how these, fraud networks are operating is that they are aging these identities over a time period. So they'll take small loans, repay back on time, build credit history, have trailing transactions, basically, aging, nurturing these synthetic borrowers like long-term assets. So when they scale exposure, they already look prime. So this is not just fraud, one-time fraud, but this is staged portfolio level fraud. And then comes the more sophisticated layer, which is the system probing, right? So we have seen that these fraud rings, they will submit thousands of low-value applications by slightly altering some parameters. For example, GST, bureau, banking, anything. And they will try to observe using approval and rejection, and they will try to identify the underwriting threshold. So basically, they're using reinforcement learning against the lenders itself. So they're not guessing anymore, they're learning. So our defense definitely cannot be just static rule-based. So we need the rule-based defense in terms of our governance, explainability, policy maintenance. But other than that, we have to definitely look at how the borrower is behaving month on month, the connection between their maybe IP address, banking, GST, bank accounts, everything. And then more than that, also, we have to look at the network intelligence, how maybe a cluster of entities is behaving. So all of that can definitely put us ahead of these fraudsters. Thank you.
Fantastic. I think, Devanshi, it was a very well explained thought. And to be honest, what we have seen is that, as mentioned by Devanshi, that there are AIs which are probing us. So there is algorithmic learning which is happening on a daily basis, and they are trying and testing by submitting applications, as she mentioned, and then coming to a conclusion that, okay, this is what the thresholds are and this is how we can exploit. Said that, it is also very similar to how in real life we used to think about sleeper cells. So there were people among us who were from organizations who were sleeper cells, who were just behaving like us, living our lives. Similarly, there are synthetic bots which are living financial lives, digital lives, and they are being trained every day so that tomorrow they will be able to actually exploit or create a major fraud later on. So as very well mentioned by Devanshi, that they are creating their credit histories in such a way that where they can pass on as a normal, real human being. And that is the length and breadth of how AI versus AI is happening, because this is how the fraudsters are using AI. What about us? Are we in NBFCs even thinking about AI? Have we even thought about AI governance within our organizations? So that is where we are coming from, and I think that is the relevance of this topic for the panel discussion also, to just open up this whole new chapter of how AI is being used as an adversarial and how we in organizations can also use AI. Said that, my next question is for Jatin, where when it comes to AI, as we understand in the NBFCs, we also understand that till now we were always deploying traditional risk management techniques, and which were always reactive. Now what we have just simply heard is that it will not be taken care by any reactive approach when it comes to risk management. So how should financial institutions think about the shift towards maybe predictive risk intelligence? Because this is a huge challenge now, coming from a reactive risk, traditional risk approach, to now trying to cope up with this new use cases of AI.
So I would say that the shift from reactive to predictive risk management is not a technological upgrade. It is more towards changing a risk management philosophy. So traditionally the institution were built to book their losses when it was crystallized, right? But as on date, in current environment, high velocity lending environment, that structure is completely outdated. It's strategically late recognition. Having said that, the financial institution should think about AI as their, specifically these kind of predictive analyticals AI as their capital preservation strategy, instead of taking this as a one of the analytics initiative. So it's more about governance. It's more about taking this as a line item. When embedded properly, predictive frameworks will allow lenders to basically ensure a predictive analysis that about the stress behavior before the actual delinquency. Having said that, this also comes up with few risks like technological risk, bias risk, model risk. So this needs to be analyzed. So this is not a technology concern. This is more of a governance concern. So it has regulatory implication. It could have a balance sheet implication as well. So that ways, a financial institution should take care of AI as of now in a predictive analytical manner. So finally, I would like to say that the shift must be at two ends. One, we should move from the lag indicators to leading indicators. And simultaneously, we should also have a strong governance system in place. We should strengthen the model governance. We should have independent validation, and we should have board level oversight as well to ensure an end-to-end culture.
I totally agree with you, Jatin. I think what you mentioned really resonates very well, because when it comes to predictive risk intelligence, we are not only talking about the risk management with respect to the regulatory and financial risk, but then there are the operational risks also that we are catering to. So my another follow-up question to you would be that as we see these AI use cases that people are using in the company, so have you in Hero FinCorp thought about, or you have started using any risk-based use case for AI?
So there is a proper model validation what we are doing as on date. So there is a governance platform also. Like there is a model validation team who take care of all these kind of predictive analysis. And then as a governance function, as a third line of defense, we are also validating that, ensuring that that is working properly. Because it's not, if it's not implemented properly, that will actually harm the company rather than benefiting that.
Yeah, it will amplify the biases. I am totally agreeing with you. With this, I would like to now go to Ranjit sir. And Ranjit ji, I personally feel for any lending, whether commercial or personal lending, the biggest thing that everybody is talking about is NPAs. They talk about NPAs, they say that I think NPAs should not be there, but you know that NPAs will be there. There has to be some method to that madness, maybe. And when we talk about NPAs, where do you see AI generally moving the needle from preventing loans from spilling into delinquency?
Yeah, thanks. So yes, as you said, you know, however we might hate NPAs, it's a reality of the lending business across all asset classes, right? Whether secured or unsecured. Now, since I am from the commercial lending supply chain finance space, so I would address this issue from the perspective of a commercial lender. When we talk about reducing NPAs, it encompasses the almost the entire credit generation activity, which is starting from origination to underwriting to you know, the next stage being monitoring of the loans, going on to portfolio risk management, and thereafter, you know, policy, and then policy using the lessons learned from each of these into incorporating them into policy, and then building a feedback into the underwriting. And if you run this cycle well, with or without AI, you would do a good job of controlling your NPAs. Now, the other thing I would like to point out is that I think with with artificial intelligence in particular, uh, the opportunity has arisen to address this credit life cycle of the in the commercial lending space, and I expect this to have a big impact in in the coming years, because this asset class has a lot of qualitative and a lot of judgment built into the way loans are manufactured here, right? Unlike smaller loans, right? Say a personal loan or credit cards, where it's very you know, the risk management is very quantitative in nature, driven by models. And on the higher end of the spectrum, large corporates, where credit ratings come into play, and loans are very liquid. But what we are talking about here, which is commercial lending to SMEs or relatively smaller companies, a lot of judgmental evaluation of data has to be done. So if we pick up the underwriting piece, and of course, you know, before you start, you need to put in place a data layer and have a solid policy framework in place, because without that, AI can't help you, or for that matter, any automation can't help you, because you got to know your business well. But assuming that that's in place, you know, the underwriting involves evaluating a large amount of financial data and data from alternative sources such as bank statements, the GST footprint, the ROC, and the bureau. And a comprehensive credit view is formulated by taking each of these into account, first in isolation and then together. So data from one should support the outcomes from the other building block. And that's the qualitative aspect of lending. And that's where you can build an assisted model where AI can come in, increase the computing power that the analyst has at her disposal, right? And throw out a recommendation that is visible to the analyst in terms of how this recommendation has been arrived at, right? And then, and that's how, you know, you will be able to exploit the technology that's at your disposal. And then we move into the monitoring phase, and monitoring is nothing but mini underwriting that you do. But at the same time, there you also have at your disposal your own transaction track record of the borrower, and you have the borrower's conduct, the cash flow patterns, the bank statement patterns. You have a more intimate knowledge about the borrower, and that is something that you keep revisiting time and time again to see if what you approved has deteriorated in a material manner or not. And if the delta is something that you don't like, that's when you address, you move it to taking early action, deciding whether to exit this loan, move to recovery, cut your exposure. There are various tools at your disposal to do that, provided you've done a good job of the monitoring and you've been able to spot the deterioration in credit. And that has a direct, obviously, you know, and then the next move is recovery. And then recovery strategies would vary depending on customer profile, what kind of documentation, what kind of product you've sold to the customer, etc. And there again, there's a lot of judgmental, aspect that comes in with the legal team and the collection teams. So again, there are several AI use cases embedded there. And thereafter, in terms of evaluating the portfolio, looking at portfolio segmentation, is it aligned to the risk appetite and the strategy that you have? Is it are each of those segments moving in the direction that you want them to move? Right? Is again an analytical activity in itself, and so there again the opportunity to do the same thing. The portfolio analyst can handle larger data sets, can do deeper analysis, more real-time analysis to support their conclusions with the help of AI. And so that's the feedback loop that I'm talking about. At each stage, a lot of small use cases can be generated, keeping in mind issues such as data security, observability, and ensuring that an audit trail is kept, because at the end of the day, lending is a regulated business, right? And RBI will come calling, and they will want you to explain each of your credit decisions. And so even if AI is available, this is something that's non-negotiable. So I think that's broadly the construct within which AI would impact NPAs. And done well, it can transform the economics of your business in a very comprehensive manner.
Perfect, sir. I think one of the key takeaways from that, especially when Ranjit sir were talking about the use cases of AI, the one thing which really stood apart was making sure that there's a human in the loop. Because the more we process via AI, the more maybe there would be no opportunity for someone to have their grievances being redressed. So although it is helping us to process faster, having deeper insights into the data patterns, and helping us making sure that NPAs are not going towards delinquency with various use cases. But what has really stood out is definitely having a human in the loop, as well as AI becoming an assistant to various processes to just speed it up and making sure that we are better positioned when it comes to AI is preventing loans from going into delinquency. So said that, I have a very open question for all three of you. I have recently come across, I think all of you recently came across this news where one of the companies have built an agentic AI for end-to-end payment processing. So it might be right now you want to book tickets, you will actually ask AI help to help you the right ticket that you want to book. But when it comes to payment, there will be an OTP send, OTP being processed, and then the booking transaction gets completed. But what we have seen now is that recently during the India AI Summit, there's a payment company which came up with this agentic AI model, which they are going to soon deploy, where it will be end-to-end integration. Maybe you will just tell someone, or maybe a assistant AI, to book your tickets for Delhi, Mumbai. And the next thing is that your actual tickets have been booked with the payment already done, wallet already debited with the amount that was the best price for that ticket, and with your favorite seat, etc. So if we are looking at this kind of technology, and we are looking at agentic AI solutions coming into these areas, what do you think would be the major challenges when it comes to AI versus AI? Because these kind of use cases will only grow. Maybe in your own companies, you will come with some kind of an agentic AI which will maybe end-to-end help you with supplier credit, etc. So for each one of you, maybe you can list one use case and what is your thought with respect to agentic AI coming in the fintech area. Maybe Jatin, we can start with you.
I'll say as I said, there is a risk of technology, right? So someone might misuse by using AI with your funds. Like as you said that your account will get debited and your ticket will get booked. What if you don't want to book that ticket from that particular website, or maybe the transaction is not, one of the example you shared that your money will be deducted from your account for the best, whatever the best price available. What if that is not a best price available, right? So there is a chances that it can be misused. If I talk about what my company is doing in that, there are collection agencies working in few AI things, right? So these collection agencies are using AI, like customer has given the funds that is automatically credited in the customer account. However, the money is actually coming at a later date, and there is a mismatch. So there are use cases. We are working on that. Again, it's more on the governance, how we are governing those things.
Yes, so definitely, I think similar use case could even be applied for us, right? So for collections, even the user can have an agentic assistant, and automatically, the user can just give an instruction for the collection amount to be deducted by from his bank account. But again, I think some of the things that we need to keep in mind during this thing is that their AI again can be, engineered in a way to make use of such gaps in the such automations in the system. So definitely behavioral biometrics is very important. You know, how fast is the deduction occurring, how fast is the entire process occurring, and during the instructions as well, is the instruction actually given by the user itself or not? So in that, how the device is being used, how the application is being used by the user, all of those inputs will be very useful. So as, of course, it is something that would make a user's life much easier, automating everything. But we need to keep in mind the AI use cases which could be used again by the fraudsters over here against us. So yeah, the balance of that going ahead is quite important.
Okay, thanks. So I think in my case, I did mention embedding AI at each stage of the loan journey, at the loan creation cycle and the loan management cycle. I think all of those at each stage is actually an agentic AI opportunity, because the analytical tasks as well as the risk management tasks are a bunch of discrete processes that need to be performed involving judgment, and we can potentially build an assisted AI assisted or an agentic AI assisted environment for the analyst. Another interesting use case could actually be extending this to outside the organization when we reach out to the customer for the first time, right? And at that point in time, and while in commercial lending the nature of the customer varies a lot, it's difficult to really have a standardized script for that interaction. But a lot of pre-underwriting, a lot of basic checks in terms of taking the right kind of customers, right kind of documents from the customer, ensuring that the standard information docket is done, having a very basic interaction with the customer and creating a login memo, etc. So that the real human interaction starts when you've already done a very, very basic pre-risk evaluation and have zeroed down to somebody who's a better target for your for taking forward the loan discussion. So I think that sort of a pre-vetting is an interesting use case which agentic AI can help in.
I think I hear them loud and clear. So maybe in order to sum it up, maybe I'll ask them, will they trust agentic AI with their bank accounts? So Jatin, would you like to trust agentic AI with your bank account? Or maybe a wallet? Because that is how they have said, right? NPCI plus Claude plus Razorpay. They are saying that there's a wallet and agentic AI will be debiting it. Will you trust it?
See,
You can use this.
in today's scenarios, I would say no, because it's, as I say, it's a financial transaction, and it's on a very early stage. Like we use bot. We have seen use cases where bot is actually someone cracked that piece and someone misutilized that bot piece. So I would not like to have use my financials through AI as of now. But maybe yes, maybe in short time, 6 months or 1 year, when we'll have a different kind of a structure altogether, different kind of a governance altogether, maybe then yes.
What about a car with an AI riding it and you sitting at the back like a robo taxi of Tesla? Will you sit in it?
Again, I think it's more than financial, it's my life. Then
So two critical things, right? Either finances or life.
so maybe in today's scenario, no.
Okay. So with you, Devanshi, what do you think? Your bank account and AI, agentic AI.
So I think I definitely have a similar response. Maybe not today, but then again, maybe somebody was hesitant to even use an app, for their banking. But today everybody is doing it because we know it is secure. So at some point when we know the governance is strong enough and the security is in place and we feel secure, so I think why not?
Okay. And what about the robo car sitting at the back,
Robocar, I mean, similar.
driverless?
I think a lot of people are doing that right now. They are in US and a lot of countries it is happening. So again, I think similar strategy.
Okay, perfect. Ranjit sir, what about you?
Yeah, I think I concur with the with both the other panelists on this. In both aspects, I think what we are talking about is user comfort comes when you see a larger part of the population using it. It's about whether that particular use case is widely accepted, which also means that the required levels of governance have been achieved, that the required levels of security have been achieved. It's hard to be the first person doing this, but it's a lot easier when you see everybody else or substantial number of people having moved to adopting these technologies. So I think I'm in the same boat as everybody else. Yeah.
Perfect, sir. I think that is a fantastic ending to our panel. What really the panel's second statement was combat advanced cyber threats. So I think if you are able to combat these cyber threats for AI use cases, people will be more secure. They will feel more welcome to use such products, which are going to grow, as was being told by Devanshi, that going forward, we will see more such use cases coming up in the industry. And I feel AI versus AI would be something that we'll all experience maybe in couple of years. And we should all be ready to use agents doing our groceries, our maybe Uber hailing, and maybe a robo car driving us. I don't know about Indian roads, but at least outside we can, right? Okay, thank you everyone. That's it from our panel. I think it was very useful, as well as I thought that some of the conversations that we had are very insightful. How NBFC's BFSI is looking at AI use cases, adopting it, and in today's world when we are talking about AI versus AI, how we are trying to mitigate these risks and move ahead. Thank you everyone.
Thank you, everybody, for your time. May I request everybody to please give a big round of applause? Thank you. Thank you, everybody. Thank you. Thank you. Also, I will request Mr. Ashish Srivastava to please join us on stage. And I will also request him to please present memento to Mr. Karthikeya Raman. Thank you, sir. Thank you, everybody. Thank you.